Right, Sreekanth Nadella, Managing Director and CEO of KFin Technologies joins us. Let's talk numbers and let's understand how things are moving for the business, for the sector and for the individual aspects of KFin Tech. Good morning, thank you for joining us. Let's first start with the big picture, because the minute I say a company which is in the business of managing DMAT, giving back-end services, managing registrars, everybody thinks that sky is the limit. I mean, this is like boom time. Is it true?
First of all, very good morning, Nikunj, and thanks for having me over. Short answer is yes. I can't be more optimistic about the industry and the specific scope of services we render within that industry, at this moment. I think it had never been this good. And not just the euphoric one-year growth of the markets, etc., but if you see the financial inclusion aspects of mutual funds driving to the last, city in the country. Every single year, nearly about 75 lakh individuals are turning from minor to major, and they're all interested in investing in mutual funds or some, financial asset class, and not just in, land and bullion, as was the case back in the day. And all of this offers phenomenal amount of opportunity for us. And we're not just the plumbing and the, back end and the tech work of it. We are actually doing a lot of front office work in today's world. We're actually championing the cause to the extent possible to get a lot of people included into this by creating digital ecosystem, which makes it extremely easy for people to invest.
How would you introduce your company to our viewers? I mean, for example, when we say that if you're bullish on India, you should be bullish on mutual funds. If you're bullish on mutual funds, you should be buying AMC stocks. If you're bullish on DMAT, you should be buying, CDSL and other stocks. So how would you introduce your company for our viewers who would say, okay, I know this guy, I've seen him somewhere. I like what he says on ET now, but I need to know more about his company.
Thank you. That's a great question. Well, I would like to characterize our business as slightly boring, not very glamorous, and I believe those are the best kind of businesses to be in. They are slightly under the radar. They are the businesses which are absolutely quintessential, and if they do not function well, you will have a existential problem, honestly, for the entire industry. I can't imagine a day when KFin Tech does not, run, and then you see the capital markets humming, right? So we manage millions and millions of transactions, 7 million to be precise, on a normal day. Little about 3 trillion rupees worth of transactions get settled on our platforms and through our people every single day. We carry massive amount of risk and the operational processes. What we do is, when you look at India's growth, and as you said, equivalent to mutual funds, we offer a secular and a de-risked approach as against one individual stock and asset management or somebody else. You are carrying and averaging it over 27 mutual fund companies which we manage at this moment in time. We also manage 500 plus alternative investment funds today, which is roughly about 40% of the market. We manage 10% of the national pension system. Today we have 55 clients amongst the countries of Malaysia, Philippines, Hong Kong, Singapore and Thailand. And we are the fastest growing Indian company abroad in the space of registrar and transfer agent.
So to put it simple, you are like what a BPO was for G and what a KPO is for mutual fund?
That's one way to characterize it. Yeah, yes, you can call this as a KPO equivalent, definitely manage the entire tech and operation. There's a slight difference. We do not look at our world as an SLA-driven model. So we are, for all practical purposes, the extended technology and the operations arm of any fund house. So we're just sitting outside of their ecosystem. We carry everything in terms of the risk and managing the operations.
And if you shut down, what will happen to the mutual fund? What is the service vacuum which will get created? How essential are you?
Well, you cannot invest, you cannot redeem, you can't do anything.
So if I buy a mutual fund, essentially, Aisha, it will go through
him.
It will go to on the website of the mutual fund, but it'll back end will be managed by you.
That's correct.
See, so simple. You could have kept it so simple.
Yes, that's mutual funds, of course, and for every other business, it is something else. Yeah. So what you do not see us, above the radar. Everything else that happens beneath the radar is us.
Okay. But tell me, in the last quarter alone, you've added about 170 new corporate clients and 50 lakh investor folios under your issuer solutions. That's great growth numbers, just prima facie going by the numbers itself. In, say, the next 2 to 3 years, what's the scalability of your business as the markets are opening up?
So our issuer solutions business, especially the one you just alluded to, that's a factor of, so much of first and foremost, 97% of my revenue is recurring in nature. Right, and which means that if I win a contract, in all likelihood, it's there for life. And we have rarely ever lost a contract in our entire 37 years of corporate history. So the mass expansion of retail investors coming into the equity markets augurs very, very well for us, because the commercial model is we charge certain amount of rupees per folio. More the number of IPOs, the better the news for us, because we also have the episodical one-time revenue coming from managing the IPO, then also the carrying run revenue every single year from there on. We believe that the current investing pattern in mutual funds in India is hardly about 3.5 unique investors, and that's just nothing at all at the moment. Considering the population of 150 crores, you take away 50 crores for minors and elderly who may not want to, you're still looking about just 3% of investable population investing today. And every single year, near about 1 crore individuals turning major. That's the opportunity that presents right there, right? Now, these are still having a dependency on the market. Our strategy, however, had been to broad base beyond one asset class, and hence we got into alternate investment funds and pensions and private retirement schemes, what have you, and also diversify the geographical risk. We do believe, as a phenomenal story as India has to offer, there will be cyclicalities. In order to kind of have a hedge, we expanded globally at this point in time. So both asset class expansion and geographic expansion is our story at the moment.
What's the biggest risk to your business?
Well, I think it's going to be fairly ubiquitous when everybody will tell you that. Definitely cybersecurity. I think we sit on some of the largest concentration of data sets in the country or anywhere in the world for that matter. We manage near about 9 crore unique investors. That makes us probably the only entity in the country which manages near about 90% of all investors, financial investors in the country, between the equity, bond and the mutual fund markets.
What stops the fintech to offer the same service at half the cost, which is AI driven?
We are fintech. We will be AI driven ourselves. It's not the technology, Nikunj. I think, so I come from a technology background. So I was with Accenture for 15, 16 years prior to being here. And what really charmed and intrigued me about this business is as to how complex the domain is. You need to understand intricately 37 years of SEBI's rules and regulations, and every single asset management company's own specific schemes and the design schema that goes into it, and then basically have your technology that runs behind it. So technology is the base case, everyone has it. What nobody has and very precious few people have is the domain which we built over the last 37 years. If anything, if you see in this industry over the last 7 years, there has been more consolidation. When I joined, there were 7 companies offering registry services. Today, there are only 2.
Overall, the operational margins, if I'm not mistaken, were at about 45%. You spoke about the non-mutual fund business as well, different classes. What kind of margins can we expect from each of these businesses?
So we track to the business at a business unit level. Most of our businesses tend to oscillate between 55 and 65%. Right, and then of course, as a growing business where we continue to expand for geographical expansion, technological innovation, so on and so forth, and then as a corporate culture, we expense almost all of it out, which effectively means that if you take out the one-time episodical expenditure we incur, because we are starting a new country or a new service or a new platform, our margin profile, could be up north of 45 too, but then at a business unit level, it could be anywhere around 65%.
If I look at mutual funds, and this is a view coming from the regulator, that size and scale has reached, which means operational efficiencies have kicked in. What you were charging to customer or unit investors, now that needs to come down because of operational efficiencies and scale. So if mutual funds have to bring the commission down, the first thing they would go is that they would call you up and say, okay, I'm paying you too much, bring the cost down. Sure. Isn't that a reasonable concern?
It is, but so we don't get commissions. So just to be clear, so the typical blend of an asset management industry, as accorded by the total expense ratio by SEBI is anywhere about 100 to 150 basis points, depending on the scheme. The registrar and transfer agent's cost to that particular 150 basis points is just about 3 basis points.
That's it.
That's about it.
So 3 paisa is only passed on to, let's say in this case, registrars.
That's all.
That 3 cannot become 2, it cannot become 1.
No, so there is yield pressure. There had been yield pressure all along, because we do believe, as you rightly said, we take a very partnering approach with our clients. As our clients' volumes increases and our revenue increases, we do give a certain amount of discount, which are anyway baked into the contract itself, which are called volume discounts, basically. As the total assets increase a particular threshold, there's a certain amount of additional discount that gets passed on to them. So the pressure on the asset management companies to further drive operating margins, if they really have to get to that number, squeezing more out of the registrar and transfer agent isn't going to get much. You're going to probably get 0.03 basis points, which doesn't move the needle any which way. And more importantly, that amount of money left with us actually had been helping the industry to grow substantively, because we're able to create the digital ecosystem, which is very much necessary to penetrate into every nook and corner. So the pressure isn't as much, for us. We do continue to have those pressures, but the bigger bang for the buck will come from, other expenses, your SG&A and your commissions as against the RTA job.
Okay, Sreekanth, great to have you on the show. Thank you so much for taking the time out and joining us.